Hey, everybody, I'm Robert Yerby, and I'm an insurance professional, and admittedly, kind of an insurance nerd. My friends and family tell me that nobody is going to want to listen to a podcast about insurance. So instead, on this show, I'm hoping to share a story or have a conversation with a guest about some relatable experience, and then show you how insurance impacts that story or topic. My hope is you'll enjoy a few laughs with me and maybe learn at least one interesting thing about insurance along the way. Here we go. All right, hey everybody, it's podcast time. I'm Robert Yerby, and today I have a guest. I don't always have a guest, but today I've got a guest. Uh, Cecilia Deno, Cece,
Yes.
glad to
Hi,
have
hello
you.
everybody. Glad to be here.
And like a lot of times when I have a guest, we have a video version of this episode. So this will be on YouTube and the usual audio version everywhere people listen to audio podcasts. So, Cece, I invited you on because we're working together now.
Mhm.
You're you're the instructor for one of our newer classes at BMFCE, and I'm not sure if I've had a previous episode where we talked about excess and surplus lines insurance, but I should have. I should have an episode on that because whether you're an insurance agent or not, and I think that there's a lot of people that listen to this uh, podcast that aren't insurance agents, they would hear excess and surplus lines and have no idea what that is, and yet a lot of them might actually have an excess and surplus lines policy without even knowing it.
Yeah, absolutely. And I was definitely one of those people up until I recently worked for a broker who does the excess and surplus lines. It was a whole new world that I was not privy to. And it was just so fascinating because it's almost seen as like the other side of insurance, but it's very relevant and it's very much right in front of you. You just have to know what you're looking for.
Yeah, so these wouldn't be, the insurance companies that are advertising during, NFL football games, right? There's no Jake from Excess and Surplus Lines Insurance Company, right? They don't have mascots.
Exactly. Exactly. Yes. Because of the way that excess and surplus lines is regulated, it is written through authorized brokers. And so, because of it being super niche, there is a lot of extra licensing that goes along with being an excess and surplus lines broker that sort of removes it out of the way that generally the general public view insurance.
Yeah, yeah. It's not mainstream, but still
Exactly.
super important. So and I don't want to steal your thunder. You can tell me the kinds of things that you're into, but I'm an insurance agent also. I don't just teach classes. And a lot of the things that I'm selling are E&S products. For instance, I work with financial institutions to protect the collateral in their portfolio.
Okay, yeah. Mhm.
A lot of times, well, and it's some of the stuff is force placed or lender placed coverages. So either the borrower can't get their own insurance for whatever that particular piece of property is or whatever the risk is, or they choose not to. And so the bank goes out and gets it. Well, um, to use an example, force-placed flood insurance is often a surplus lines product. It's not a national federal or NFIP flood policy. It's ENS. Yeah.
Absolutely. Yes, that is 100% correct. And there's a couple of factors that would make that policy excess and surplus lines. The fact that there are multiple parties involved that can make it excess and surplus lines. And also because it could be deemed as a short-term policy would also make it excess and surplus lines. So anything that generally doesn't fit in a very nice insurance box, it will more than likely go to the excess and surplus lines market.
Yeah. I also write a little bit of active shooter insurance.
Mm.
Um, and we've talked about that before on the podcast, but yeah, that's again outside of the mainstream and very interesting risks. Yeah, very.
Mhm.
It's sad that we
Yeah,
even need that insurance, but that is out there. It's made available because of the excess and surplus lines market.
yeah, absolutely. Because of the nature of the situation. And if your business or if the business is explosives or something could explode, it most likely will fit in the excess and surplus
Yeah.
lines market.
Do you, when you're out driving, and this is absolutely a true story. On Monday, I was running out to a baseball game with my son, and we passed this business that it was like propane tanks. It was huge, like commercial sized propane tanks at the side of this like county highway, and it wasn't even set back very far from the road. But I'm in the passenger seat. I saw it, and I was like, I bet the insurance at that place is crazy expensive. And he's
Mm-hmm.
like,
Yeah,
you do that, don't you?
absolutely.
You just notice things like that and wonder how much the insurance is. And I was like, absolutely. Like, I bet you that's crazy.
Yeah. Oh, 100%. Yeah. And I imagine that they are a multi-layered policy that ensures like one specific aspect of their business. So, and that's also where surplus and brokers come in handy, where they can um, create those unique risks and ensure that they have the proper coverage
For all those layers.
for all those layers. Yeah. So you definitely want someone who is knowledgeable about the market and knowledgeable about your risk exposure because they'll be able to give you the best answers.
Okay, so let's use the propane business as an example. So do you mean like they've got to have one policy for maybe like um, explosions and fire and stuff like that? Maybe
Mhm.
another policy for like pollutants. Maybe there's no fire, just something's leaking and it gets into the soil and into the water, stuff like that. Um, what else is going to be an example?
Yeah, absolutely. So those two would definitely be relevant. So like anything flammable, that would be like a product access liability policy. But you also want to think standard brick and mortar. Someone's going to
Oh
slip
yeah.
and fall, you're going to have a liability policy. And then insuring the building itself because of that extra exposure of flammable contaminants around the premise. It's not going to be just a standard fire, you're protected for fires or certain things for your property coverage. They're going to build in that aspect that there is a heightened risk in the building. And that's really like where ENS benefits because you can have this flexibility and accommodate in price and an exposure for what you can insure.
Okay. And what kinds of
Yeah.
things do you specialize in?
Yeah, so I've seen a variety of different things. So one big thing in the excess and surplus lines market are daycares.
Oh, okay.
Yeah, so that's like definitely a big one. Um, General contractors, just because of the nature of their business, they need the flexibility. They're working on multiple projects, so that accounts for that flexibility there. Um, Another really big common one would be mixed use buildings. So if you want to think of commercials on the bottom floor of a building with apartments stacked above it, because of that residential and commercial risk, a normal insurance policy can't accommodate for that mixed use. So what ends up happening is you'll write those type of policies in the E&S market. Yeah,
Interesting.
and
Okay.
especially in the course that I hosted for you guys, like we're talking about hurricanes and cannabis and gig work. There's just like such a variety of things, especially since the world is so much more complicated. That stuff fits so nicely in the ENS market.
Yeah, and that's where I'm going to go all the way back to the beginning. I said, like, a lot of people might have an E&S policy and not even really be aware
Mhm.
of it. Uh, my son just moved from Florida, the same son that I was out riding with earlier this week. He had just moved from
Right.
Florida to Illinois,
Yeah.
and maybe your family does this too, but it, at one point he asked me to look at his like homeowner's policy packet,
Hmm.
and he had a separate policy for wind, and it's a excess and surplus lines product for
Hmm.
him anyway. And I think a lot of people down in Florida have those E&S policies because their admitted carrier non-renewed them. They couldn't find something else that, they called an independent agent, and this is what they end up with. And
Hmm.
it's not a big deal, but yeah, they might not even be aware that it's a non-admitted carrier.
Yeah, absolutely. Because the weather has become so much more severe in places like Florida, Louisiana, and California. Think of the wildfires out in California. Admitted carriers, they are moving away from that business because they just can't afford to insure it anymore. And so, of course, you need to have insurance per bank requirements and for mortgages and all those kinds of things, and also for peace of mind, um, for and financial reasons. That's where the E&S market comes in because they can pick up those risks where the admitted market says we're not doing that anymore.
And to be
Yeah,
clear,
it's
like these are not like shaky, poorly rated insurance companies. These are good insurance companies. It's
yeah,
just the manner in
actually,
which they're regulated.
yeah, exactly. Yeah. In fact, they have a more financial secure position than admitted carriers because of that added risk where the carriers are not necessarily regulated. It's the brokers that are regulated, um, that they have to have that extra protection in place where they have to have more secure financial backing.
And so if somebody, and I'm just talking about a consumer, was aware that they had a non-admitted carrier or an E&S carrier, I think a lot of the times they become aware is they get a notice that's required by their state. There's a big alert that says you are being placed with a non-admitted carrier, and they might question that. Um,
Mhm.
what are your thoughts on those consumer alerts and what people should think or do about those?
Yeah, absolutely. So the consumer alerts, they're there as an additional layer of information. But most likely, if you are being placed in the E&S market, you would kind of go down the road of already knowing. In the case of having multiple losses, if you had a really poor loss history, what you're going to do, you're going to go to your insurance agent, they're going to shop around, and most likely all the admitted carriers, they're going to decline you. And that's where, after those declinations, there's the benefit of going to the E&S market. So, to some degree, you might already be informed, but that last piece of disclaimer is just so that legally you are aware of being placed in the non-admitted market.
And in those consumer alerts, a lot of times there's the information that, if you or if your insurance company were to become insolvent, these are the consequences, right? And
Yes,
that's where people then
absolutely.
have
That's
questions. So you want to explain that
correct.
part of it?
Yes. So because um, non-admitted carriers are not regulated, um, there is a chance that an insurance company could go out of business. And so the difference between admitted market and non-admitted market, when you're in the admitted market, you will always have that extra layer of protection that you will be made 100% whole again. In the non-admitted market, that guarantee, that promise is no longer there. So that is definitely a piece to consider. But if you're not looking between admitted market and non-admitted market, you're looking between not insured and the non-admitted market.
That's
That's
a fair point.
generally that's generally the situation you're in. In some instances, there might be a pricing factor where you could go to the non-admitted market and possibly get better pricing. But generally, most people, most insurance agents, they will keep people in the admitted market.
Sure.
Yeah, absolutely.
Okay. And before we jumped on, I asked you real fast, had you been on a podcast before? And you said that you had hosted a podcast, and I wanted to wait until we were live here talking. What was your podcast about?
Yeah, so I used to host a podcast before the pandemic hit. It was called Sincerely Yours,
Okay.
and it focused on living life to the best. It was making sense of going through life. So it's sort of like a lifestyle podcast where I give like general advice and my opinion on things. And um, the pandemic sort of hindered a lot of my content. So that's sort of it's been on the back burner. I'd love to bring it back, but it hasn't been too much of a project lately.
Could I still find it on like Apple Podcasts or
Yeah,
yeah?
yeah,
All right.
absolutely. I still host, so it's still up, and so that was my first podcast and the one that I did for almost 5 years. And then I swam in college, and my swim coach, when he retired, I contacted all of the former swimmers and parents and assistant coaches and had a special podcast just for him where for 86 days I interviewed everyone who had worked with Bob, and it was such a special gift and he definitely appreciated it, and that's also still up if anyone would like to take a listen.
Cool. Well, I can link those in the show notes.
Yeah, absolutely.
Yeah, that would be cool. Cool. Because not everything has to be about insurance. Like we're real people, like we do stuff besides talking about excess and surplus lines coverage,
Hmm.
right? Like,
Yeah,
yeah, if we
absolutely.
got together for coffee, we probably wouldn't talk about insurance the whole time, right?
But we might.
We might, depending on
Yeah,
what kind of
I
day it
feel
is.
like yeah, insurance is just like a piece of your life and a piece of everybody's life, and the whole point of insurance is to make you whole again. So it's there for emergencies and it's there for certain situations, but it's definitely very important.
Yeah. All right. Well, cool. Like I said, you're teaching a class for us now,
Hmm.
and if the people listening are licensed insurance producers or adjusters and they need continuing education credits, you can find our live webinars at bmfce.com. You can find CC's excess and surplus lines insurance course, which is approved in most of the states we're working in. It is a 3-hour class, so 3 credit hours, and it debuts. Well, it will have debuted by the time this episode comes out, so it's already out there. And I always like to say this: if you like the show, leave us a rating or subscribe, or better yet, forward an episode to one of your friends that you think maybe has an excess and surplus lines risk that might need to be covered. Let them listen to this about it. Really appreciate all that. And Cece, thanks for joining me today. I'll
Oh
talk
yeah.
to you again soon.